In episode 123, we talk e-commerce and particularly Shopify. Shopify is a globally recognized company where its platform offers businesses an opportunity to build their online business and scale. Some of the biggest brands that we know today have built their business using Shopify. Just to name a few, Gymshark, Kylie Cosmetics, and also Fashion Nova. We discuss what makes them a great company, their business model, and how they've actually grown from zero from 2004 to at one point worth almost $170 billion. Conversely, we've recently seen their share price fall dramatically, whilst at the same time their sales are actually growing, which makes it a very interesting business. So we actually discuss what's gone wrong and potentially what they can do to turn around the stock. If you're interested in learning more about this business, this episode is definitely for you.
Take off, take flight with you. For we never fly, but we're flying.
Okay, so today we're stepping into the e-commerce industry and we'll be discussing Shopify. So Shopify is actually a multinational e-commerce company based in Ottawa, Canada. It's an e-commerce based business that offers other businesses an opportunity to build their online stores, create customer engagement, market, and sell to a number of customers. What we're going to do today is we're actually going to unpack what makes them a great business, their growth drivers, why they've done well up to this point. But we're also going to dive into what's happened most recently, because what we've noticed is the share price has actually dropped from an all-time high at around $1,600 per share to what it is today, trading at $538 per share. So we're going to cover potentially why this has happened and what they can actually do to turn this around. So guys, another episode of Take Flight. Before we dive into this business, how's everyone doing?
I was worried you weren't gonna ask. Thought we're gonna go straight into the episode. No, I'm good. I am really good. I'm not sure if I mentioned on the or if we've discussed it, but Shual and I, we went to Switzerland a few weeks ago. We went skiing. I spent most of the time sliding down the mountain on my not on my skis, but on my ass. And it was a good time. It was a good time to, I think this is the first time I've traveled with Shual. So it's good to just have a day, just Shual and I sort of bonding outside of sort of the podcast. And then we also got to see Pabilo and his amazing family. For the folks on YouTube, P was just showing a picture of me skiing or attempting to ski. The funny, you know what's so funny about this?
I think you mean those who missed listening on audio.
Oh, viewing on.
Oh, we are on YouTube now. Actually, that's the announcement.
YouTube
we are on YouTube now.
So you know what's so funny about this is the last time I skied was like probably 7 years ago. Yeah, so I took a 1 hour class then. I was decent in terms of my skiing. So when Shua said, "Oh, go and skiing," I was like, "How difficult can it really be?" So the night before, I went on YouTube just to sort of give myself a recap on what to do when it comes to skiing. Piece of slices. But I was like, okay, Shual hasn't been skiing for a long period of time. We'll probably be on the blue mountains, the blue courses. It'll be quite simple. We take the lift up to the top of the mountain. And I'm sitting there just looking out the window like, wow, this is awfully high. Like, where are we going to get off? Are you sure there's blues all the way at the top? And we get to the top of the mountain. And she was like, "Oh, now this is the blue course." I looked down. I was like, "Are you sure this is blue?" This is not the blue I remember in Sweden. This Switzerland blue is reckless. So I ended up, Shual goes down first. And I'm like, okay, YouTube says piece of slices to slow down. I put my skis on. I go. And I have zero way of slowing down. My momentum is just coming straight down. And the worst thing about this is on the mountains, on the left of the mountains, there's no barriers to stop. Like, you could actually go off. So my technique started to become, the moment I got out of control, I'll just fall down. So I'll be like accelerating down the mountain. And I'm just like, time to fall on the floor. So I probably fell down, definitely over 10 times on the course of the day. But I just kept putting my skis on, sliding down, accelerating, out of control, fall down. And that was pretty much the ordeal. But the next time I go, I'm definitely going to take lessons. But it was a great weekend trip. Lots of fun. was great to see P and his family. That was beautiful as well. So yeah, that's me.
Oh my god! Okay, let me go next because I can build a bit on what Ollie's saying. I've never seen a more determined, resilient, perseverance, whatever adjective you want to use. That's what I saw in Olu Okanola that day, mate. If I was him, within 5 minutes, I would have gotten that lift and got the lift down. But he got up every time, sped up, and as he couldn't brake, he just fell over and he just did it again and again and again. And no, I don't know. Honestly, full credit to Olu. I would actually split that particular run into 3 parts: the beginning, the middle, and the end. The beginning bit, I think, because Olu was adjusting, I didn't realize his last skiing experience was 6 years ago. From when he was explaining it to me, I thought it was literally a couple of years ago. So I thought, okay, it's still going to be all good. But then we got to the top, and also, to be fair to Olu, blue slopes in Switzerland are not the blue slopes in Japan or Sweden. Blue slopes in Switzerland, you could argue, are probably the next level up in Japan and Sweden. So if Olu, who had his first experience in Sweden on blue, then goes to Switzerland and blue, he was in for a very rude awakening, which he got. But to be fair to Olu, that first part, I think it was just getting used to it. The middle part, which is probably the part where you saw the videos of it, Olu did great, strong balance, and I got some great video clips of Olu as well. So, as Olu said, it was really good to catch up outside of the podcast. I'm looking forward to the next trip, Olu, as well, and of course to CP's family.
Sure, those videos that you have, do you have to edit them to stop the ending, or is it just a natural ending?
Nah, it was the middle. It was the middle course. That one was fine. It was so funny because there were so many times I fell, and people would go past me and be like, "Are you okay?" And each time I'll say, "Yeah, I'm fine. I'm fine, thanks. I'm fine." But it was fun.
But to that point, Olu, you mentioned there was a slope, and I was saying I watched it on Shiro's story, and I could see Olu's legs opening up to try and hold his stance. And in the horizon, I was like, "There's no barriers there." So this guy, he might not make it on Sunday to our place, So yeah, I don't. It looks dangerous. It looked dangerous.
But it was a lot of fun.
Yeah, I'm looking forward to the next time, Olu. We're gonna go again before the end of the year.
Yeah. Olu, you look like you had a lot of fun with those beers in your hand.
No comment. What about you? Let's switch a topic. How have you been?
I know. Daniel, just to add, he wasn't just drinking beers.
I said let's switch the topic. Let's switch the topic.
As you were sure.
No, sorry, it's gone. I forgot. Daniel, how are you?
3 words. I am tired.
What's popping? Yeah, what's popping?
Yeah, all of the above. Just tired, drained, tired. Want to sleep, can't sleep. Yeah.
And on top of that, Man United is getting smacked, isn't
it? They're getting spanked. I don't even care about that too much. I don't even care about it too tough because I'm just tired. But other than that, all good. Yeah.
I'm surprised you didn't sleep on the weekend. So I also saw. It feels like I've seen all of you. I also went to see Daniel over the weekend and the beautiful family. Got to spend some time with him. I'm surprised you weren't sleeping during that period as well, just taking the time to nap. But it was good to see.
It's because you were there. I was ready to sleep. I ain't gonna lie, I was ready to sleep, but I couldn't do it. Yeah, I was tired though.
But it was good to see you.
One of the things you get used to. Yeah, it was good. Yeah, it was definitely a nice time. But I think I'm just managing. You just get used to it, to be honest, rather than trying to sleep or want to sleep. You just cope with the lack of sleep, and that's the best way. That's the best way I would describe it. Cool. P, how are you?
I'm good. I'm always inspired, but I'm particularly inspired, especially after last night. So I've been following a gentleman by the name of Dean Forbes. I first learned about him on Link Up TV. The caption was from telesales to 40 million. So it intrigued me. Learn about his story. It's so important. Representation matters very much. He's skill based. Very much similar to stories to a lot of what we're accustomed to and growing up from where we come from. But he's basically a master in turning businesses around, building them up, and then selling them off. Super inspiring, just the way he thinks, his mindset, his story, his ability to keep going. And then yesterday, I think what's also quite inspiring is that actually you don't necessarily always get some of these figures to share, public figures to kind of share what they're doing or their lifestyle or have many interviews, right? It's very few. So yesterday he was on a live with Money Station, talking basically about the recent deal that he's just done. Where he sold business for $1 billion. Huge milestone for him because it's something that he's basically been working towards. But then spoke about how the deal's been structured to basically go again, and the next target is 4 to 5 billion. But just inspiring, incredible. So I mean, I took a ton of notes. I've shaped it. I can share it with you guys. So yeah, it's just for someone that looks like me, similar background, similar story, just speaks in a very similar way, corporate career. Funny enough, actually, one of the things that is kind of around his tag is like building his wealth in a 9 to 5. There's a lot of talk today about I need to own my own business, etc. But he's done a lot of it through working for others. Um, so yeah, if you haven't actually come across him, definitely highly recommend you to check him out. But just extremely inspiring. And yesterday's live was great. So yeah, I'm just, it makes me think. I'll give you one key gem as we're on right now. So he's very, any business he goes into, he looks at the 5-year plan, and he works particularly works backwards to build it based on quarters. So every quarter he actually understands what he's supposed to achieve, so that success and failure is not felt in the moment. And I thought that's actually a great learning for us, because we have these goals that we set, but how detailed are we in developing a plan, right? Our plan usually expands to maybe a year. But if we were to take the exercise of developing a 5-year plan and then work backwards, 20 quarters, and in those quarters we know what we're going to do, that in itself is gonna sort of help us in sort of decision making and shaping the journey. So yeah, definitely recommend you check him out. And I actually hope that I believe one day we'll be able to get him on here to have an interview to learn more about his story. So yeah, said it here first. Dean Forbes interview to come at some point.
Dope.
Cool. So yeah, inspired. I'm really really pumped. And property's popping as well, so we'll chat about that. All right, cool, perfect. So Shopify. So yeah, so it's going to be a discussion about what's going well in the business, and then kind of what's not going so well. Before we sort of dive into that discussion, I thought I'll just add a bit more context and background to the actual company to help set the scene. So just sort of share some facts and figures, and then we can dive straight into sort of the debate, and then get your thoughts about how you see the business and what you was picking up in your research. So Shopify, they were founded in 2004, so they've been around for 17 years, not so long, but they've actually done pretty well in that time. Their mission statement actually is to make e-commerce better for everyone, so businesses can actually focus on what they do best. From a size standpoint, revenues are up year end in 2021 to 4.6 billion, which is actually an increase by 57% versus 2020. Very key metric to keep in mind. They've got about 7,000 employees, one of the most popular e-commerce platforms globally with about 23% market share. Some of the biggest brands that we know have actually built their businesses based off Shopify platform. Just to name a few: Gymshark, Kylie Cosmetics, and also Fashion Nova. They've got about 1.75 million merchants, so businesses that actually use their platforms to sell. Now, here's where it gets a little bit interesting. So the market cap today is currently 77 billion, which is actually down around 100 billion from the peak of sort of last year, and which is why I think this makes this topic so interesting to discuss in terms of how we see the company changing and maybe their response to what's happening. And the very last thing I say, and what we're going to add towards the end, is myself and Olu, interestingly enough, have a personal relationship, or we've used Shopify services in the past to build online businesses, because it was very much in the focus of what side hustles and business can we build in line with our 9 to 5, and build that skill set. So towards the end of the episode, if you stick around, we're definitely going to share a little bit about our experience in building a business on Shopify. Was it the right move? Because potentially we could have been shareholders, and how it would have fared. Good. So, guys, to kick off, I want to get your thoughts as to what you believe has made Shopify a great business in looking at your research when you was preparing for today's episode.
I'll start since no one wants to say much. I think what's key for Shopify's success is, like many startups, it was founded on a solution to a problem that the founders had. So originally they created a site where they could sell snowboarding equipment, which rapidly evolved to what Shopify is now. And unlike many companies, Shopify was incentivizing not just to sell their product to customers, but also to help customers become more successful on the platform. So the more money customers made, the more money Shopify made. And this drove Shopify to help their users become better merchants. And that's really one of the biggest reasons why they are where they are at now. Many companies wouldn't necessarily incentivize you. So if you look further to how they charged merchants on the platform, the more you sold, the less you would pay in fees. So as a business owner or someone using the platform, that's where ultimately I'd want to get to. I would want to get to selling so much that my fees that I pay to Shopify would be so little. So that incentive was great, and I think that evolved, especially in the early noughties when Shopify was started and there wasn't much alike, and many other sort of, say, back-end systems that would enable you to create websites were so clunky and rigid, it prevented you from doing so. So they really created an opportunity in the market to start something themselves. And one of the founders was a software developer, but wanted to move away from that. So this was a great opportunity for them to be a product-led company. And we all know when you're a product-led company, you invest heavily on the product. You want to create an outstanding product, one that would be of value to your customers, similar to Apple and similar to many others on this day, that you're really, really moved by creating and shipping products out to people, which allows you to be innovative. It always allows you to create something new. And I'm sure we'll get onto that about how they move from a product-led to a movement next company later in the episode. But that's what I probably just want to start with.
Yeah, I think sort of different from Peloton, Shopify, I can give an example of my experience as a user, right? So I think sort of my web creation sort of journey started at university. So at university, I started a company called Everything Uni. It was supposed to compete with eBay at the time. But I remember during that period of time, I was shopping around for a website. And at that time, I think it was probably 2011, 2010 time. You didn't really have that many solutions where you could build a website by yourself. So at that time, I had to find a web designer to create the whole website for me from scratch. I had to pay, I think it was approximately around 2K for the person to create that particular website for me. So then we started to see the evolution of companies such as Shopify or Wix come into the market, where they made a simple, or they solved the solution of providing a simple solution for people to create websites. You didn't need to have coding background. It was pretty much drop and drag, right? Daniel and I did programming, C++, but we weren't the greatest coders, but they provided a solution that allowed us to easily drag and drop and create a website at an affordable subscription basis, where you were able to stop and start at any particular time. So they understood a need in the market. They saw that a lot of companies were moving from brick and mortar sort of companies and moving to online spaces. And a lot of people were starting to create websites without that sort of expertise. So this was a massive space where they could provide a solution, out of the box package. You could even have some already drafted websites, simple websites that you could just leverage, and at an affordable price. So I loved the business model when it first came out. I've created multiple websites, and it was very easy to use. So for me, the model made sense. I think we're going to go into where the downfall was. I think also by moving into sort of the pandemic, we saw a lot of people staying at home, wanting to create their own businesses, which meant that the demand for sort of Shopify went up. They gained also some great credibility. I think P mentioned at the beginning, companies like Gymshark are using it. So big companies with massive revenue are designed on their platform. So those are multiple reasons why, and sort of why I like the company, and the solution that they provide.
Sure. Maybe
Yeah.
some thoughts from your side.
Yeah, so I think so digging into it, so I haven't had any experience with Shopify as a consumer, but it's obviously a brand I've heard of. And P, as you mentioned in the intro, there are some really big brands that are using it. I think it was interesting. I think for me, I always try to start off with, okay, so what's the market that they're in? So they're in this e-commerce market, which hopefully for the listeners is clear, but it's basically selling products and goods online. And that market at a total in 2022 is valued globally at 5.5 trillion. So that's a huge market. And this is a market that is only continuing to grow. If you think about trends that we see with our friends, with our families, in terms of screen time, in terms of buying products, not even just on a website on your desktop, but actually through your mobile platform, the number of people using phones increasing around the world, the people that maybe didn't have internet access, but they've got mobile access in some rural parts of the world, that will also drive the e-commerce trend. So this is a trend it's clearly a market that's growing, and Shopify is essentially serving the people that are in this market that are looking to sell a product in that very entrepreneurial space. So I think it's a great market to be in, and clearly a market that's growing. When I could dig into their two business streams, if you want to call it, so their business is split into two parts, which is essentially a subscription business where probably someone like Olu can go onto their website, set up an e-store, etc., and a website where they can sell their product. So that's one part of the business, and then the other part is called Merchant Solutions. So this is essentially for the people that are already subscribed. How can they offer those people additional services regarding payment processing, helping them get advertising revenue, get email set up, etc. So it's basically providing almost like the virtual shop for someone. All they need is the brand almost, and the marketing and the product to actually sell within the store, but they basically provide the store for people. So I think it's an amazing business model, and I think digging into this was really great. I think the only other thing that I wanted to share, P, you mentioned about their revenue. So they just hit 5 billion last year, and in 2018, so that was, sorry, in 2021 they hit 5 billion. Back in 2018, they were only at $1 billion in revenue. So you can see that in a 4-year period, they've almost more than 4x their revenue. But what I think was really a great indicator was that revenue that they had in 2018, which was around $1 billion. That revenue is still flowing through the business. So that $1 billion worth of revenue in 2018 is now actually almost 2 of the 5 billion of the revenue that they had in 2021. So this indicates that the product is good, that when people are on the platform and they're selling these additional services, people are staying on. So then basically, if you assume that 2 of the 5 billion from last year is from 2018, then 3 of the 5 billion is new revenue, which will also continue to grow as well. But then the question mark depends on whether this COVID pandemic boom will continue, and probably that's where the downfall comes into it, and we'll go into it in a bit more detail next.
But just on that, sure, that's sometimes the benefit for companies that run subscription-based models, because I can imagine of the 1.7 million users they have, how many are actually active versus how many just still have stores running in the background and they're still paying the fee. So it'll be interesting to understand, we don't have the numbers of that 1 billion, like the continued business, how much is actually not active per se. But that's just the power of setting up a subscription-based model. I actually just want to double down on the point around, in pharma we call it the class, right? So the industry itself is growing, and you mentioned it's about 7. It's going to basically grow to, I think they're saying, to about 9 trillion by 2025, 2026. But it also speaks to the appetite of even people like ourselves, because I think we're end users, which is great for this topic. But people just realizing there's options to create another businesses from home, even before the pandemic came, right? It just became also a trend and a pattern. So they're in a space whereby ultimately it just that's something that we're going to continue to see, going. And I think entrepreneurial is something which has become more in style or more in fashion. So I think it's actually just the trends and the patterns have actually worked well for the company, and maybe it's something that they actually thought about and predicted coming into it.
I think
So,
is
yeah.
like Pete, you said we've been through a pandemic where we saw so many different brick and mortar stores closed down
Mhm.
completely, right? If you now go to a business owner and ask them, do you have a website? I think 99% of people now will say yes. Where before the pandemic, there were so many businesses where they didn't feel like they needed a website solution, right? When your physical store is closed, you could be, for example, like a little small pizza shop around the corner, right? Now you need to make sure you either have a website, you're on Deliveroo, Uber, or you have some sort of solution for them. So now they're seeing it where it's a place where the understanding of needing a website is critical, especially in
Yeah.
the e-commerce space, right? And now by having such an affordable model and solution, it's a game changer. It's a game changer.
Mm. And there's a statistic to show that I think it's about 2040, 95% of sales are expected to be online. So this is only something that is going to continue to grow, to Shual's point. So I think the question comes down to how do they basically capture more market share than where they are today? Any additional thoughts or insights as to maybe what if we look at their share price peaked at around $1,600 per share? Thoughts as to maybe what helped them get there, because shortly after that has dropped now to $540 per share. So what are some of the key factors that have basically got them to that point? And I think very similar trends that we saw in the Peloton business, right? I'll just start with one of them, which was, I know it came up in the last discussion, the stimulus package during that lockdown period was something that that extra income that people have used to start things like side hustles, side businesses. So any other key trends that have helped them to effectively increase their market cap at that point?
I think redundancy, I think, would have played a big part. So I think during the pandemic year, especially the beginning of the pandemic, there was a uptick in people starting or wanting to start their own businesses. So a lot of people understood the lack of stability you can get from just your 9 to 5 job. A few people lost their jobs, and decided, you know what, this is time for me to bet on myself, create e-commerce business. I could either be selling candles, I could be selling whatever sort of product, and I need a way to get to the end customer. So the way I'm going to do that is through a company like Shopify. So they saw an uptick in demand due to the fact that a lot of people were made redundant, having to learn new skills, find different ways to start a business.
Yeah, so I think it was interesting watching looking into the share price performance and roller coaster. Is almost resembling what we discussed 2 episodes back regarding one Peloton, as you mentioned. I think what was interesting, and maybe it's a common driver that we see in some of the other pandemic stocks like Zoom, is that I think at some stage people thought that all this growth that we're seeing, this is growth, and this growth rate will actually continue over time. But now it looks like for certain businesses and certain stocks, rather than that growth rate continuing over time, what it's actually done is just brought demand forward, and then the growth rate actually continues almost to where it was beforehand. And then if that's assumed, then if the growth rate doesn't continue, then that means the future cash flows won't grow as much, and naturally this will take a hit on the share price. And a lot of these stocks that we're seeing, they're almost at pre-pandemic levels. And I think Olu mentioned that in the Peloton episode as well. I think this could be one of those drivers, but again, because the trends that we see with our friends, with our family, with people in different countries being able to access the internet now, and the fact that actually being able to create a product today and wanting to sell it from Copenhagen to somewhere in America or Africa or Asia, actually now because of Shopify is possible. And as we become more globalized, that is something that has some value. So I think that's a combination of why the share price, I think, has gone down. But there's still an underlying demand there that should grow back in the future. Just it may not be at the rate of growth that we saw in the last 2 years.
So Pete, do you want us to go through some of the reasons why we've seen a decline, or just more?
Yeah, just before we
Yeah.
turn to actually that, because sure, you put a good point. One of the things I recognize, and I think what's great about the business now, we're comparing a little bit to Peloton, is the entry points with Shopify. So
Mm.
you're actually find yourself on a platform building an online business whereby Gymshark are doing multi-millions a year. You're on the same platform, and they've got the entry points of, we know it's $29 as their starting pack per month, $79, and then it goes to $300. The difference is based on the plugins, the applications, reporting, analytics. But I like the idea of being able to offer everybody a piece of the pie, right? And Olu spoke about the user experience, which is really good. You can set up a store within less than 60 minutes using a YouTube tutorial, and then you're up and running. Generating sales is another story we'll come on to, but at least the website itself can be up and running. But with that, so I think we've covered really well the company itself, why they're actually who they are in the position today. What for me I found alarming is we see the revenues are at a good growth rate, up 57% versus 2020, but almost 100 billion was wiped off the market cap. Now, if you think about yourself being a shareholder, can you just imagine the kind of, what you'll be thinking, the kind of conversations that you're having within the company? So why has it been such a swing, right? Given that we've seen, I would say, strong fundamentals in the e-commerce space. So maybe some thoughts as to the decline, right? And what's kind of a little bit of that turnaround look like?
So for BP is it's simple as valuation, right? And yes, the fundamentals in the business are really good, right? But if the valuation is ridiculous, you just won't pay. It just doesn't make any sense. Now, in a simple, I think in the last sort of few years, a lot of people got into investing, right? A lot of people got into picking stocks, and you could pick anything and it went up. And people moved away from the fundamental of valuations, right? So if I look at stocks, one of the things I try to look at stocks is something called PE ratio. So it's your price to earning ratio. And what that is just doing is basically trying to figure out how much is someone willing to pay? How much earning are you willing to pay per share? So it's the price of the stock over the earning of the particular company. Even if I look at the valuations of Shopify today, you're looking at 80, 90 sort of PE ratio, right? If I compare that just to the index, so the S&P 500, you're looking around 35. So the higher it is, it's basically just saying the more you're willing to pay for the earnings. So it just doesn't make any sense. Now, typically when you're trying to be quote unquote a value investor, what you're trying to do is you're trying to look at a lower price to earning ratio, PE ratio, right? The higher you get, that continuous growth needs to continue, because sooner or later that you're expecting that earning to reach whatever you're paying for it. And I think what happened is a lot of people started to look at valuations where they were just ridiculously high. The PE ratios were ridiculously high, but they assumed that the revenue could continue increasing to a point where the price that you're paying today will start to become worth it. But what we've seen with a lot of these pandemic stocks or businesses is that, like Shiwa said, they either pulled forward demand, or demand is slowed because outsiders started to open up, less demand for websites. So it's still a decent business. Now, anyone that's purchased Shopify stocks prior to the pandemic, it's fine right now. They're still higher than what they were pre-pandemic. It's still a good investment in that sense. The people that are right now hurting, right, are people that continue to ride that wave during the pandemic, when the prices were getting up to ridiculous amounts. Like, especially when a stock sort of 3 times during a short period of time, I always say then it might be time to take money off the table, right? And I think during the last few years, a lot of people thought they were smarter than the market and valuation. Smart. And then the market has now laughed at a lot of people and said, hey, look, valuations do matter. And now I think what we're seeing right now is not a situation where it's the business is awful, it doesn't make sense. I think there's elements of the businesses that they need to work on. in terms of their cost model. I do believe they've got a really high cost model. If you look at their financials, they're spending a significant amount of money on marketing, which tells me that versus prior years, which tells me that they're struggling to sort of acquire new customers at the rate that they were doing in the previous years. So that needs to be looked at so that they can be a profitable business. But at the end of the day, valuations matter. Your price to earnings matter. And sooner or later, the market will correct you. So that's what we're seeing.
No, I think great take, Olu. Just quick question. I'm not sure if you looked at the other companies. Is that PE ratio kind of resembles what other e-commerce companies have in that industry? Or would you say you wouldn't look at it that way? It's high and people need to understand that.
So you can look at it in regards to industries, right? To say, okay, is it just industries that are completely high? But if I look at companies such as Wix, right? If I look at their PE ratio, I'm trying to see what it is. What is Wix PE ratio to the price to sales? I think this is showing a 7.9, so significantly cheaper than Shopify. But again, the only thing you shouldn't only solely go on PE ratios and say, okay, if it's a low PE ratio, that's when I should buy it, because then you're going to miss out on great opportunities where the revenues are going at a significantly high rate. But I think what we've seen with this sort of company or Peloton, etc., is there's a massive slowdown that wasn't included in the evaluation. And as soon as we started to see this slowdown, there's a correction, and now it's getting to more reasonable price. And to be honest, I still see it dropping a little bit. I think it's still significantly higher based on sort of the demand for them. But yeah, it's still a great company, great fundamentals. Like I mentioned before, they just need to work on their cost model so that they can have a higher price income of operating.
Sure. Thoughts on perhaps the decline and putting yourself in a position of a shareholder. How do you kind of try to understand?
I mean, if I'm a shareholder, then what I would probably do is cash out and invest everything in Armored Capital Group. But in this
small plug.
In this context, what I would do is, I mean, first of all, I think Oli really hit the nail on the head. I think it's really just a adjustment of the growth forecast, and essentially all price earnings, etc. They're just a projection on what they think the future earnings will be. And if any valuation has suddenly dropped, it just means that future earnings are expected to be much lower than before. Now, what's driven that is probably, as Ozu mentioned, is demand. It's multiple factors. I think also what has happened recently, and this is probably affecting all the market with what's going on in the Ukraine at the moment, what's going on with inflation, with what's going on with interest rates. All of these have a potential negative impact on future earnings. Now, it's just unfortunate that in Shopify's case, all of these other factors have come on top of their demand slowing down as well. And probably what we'll see is in a lot of these companies like Peloton that we spoke about in 2 episodes back and other high growth pandemic stocks, suddenly they'll see that their future earnings will probably be taking a hit. Now, I think with this, it's always important to look at the underlying business. As Olu has also said, I think this is a great underlying business. And because of the fact that the revenue that they've had from 3-4 years back has just continued to increase even to now, I think this is a really good underlying business. That again, if you're looking 5-10 year horizon, are more people shopping online? Yes. Are more people being able to access shopping online? Yes. Is this one of the best platforms that provides that? Yes. So again, if you're looking long-term horizon, this is still a good bet to do, but maybe on the short term, you could put your money in other areas.
One point from all of us in terms of so that's what I wanted to add. I think the other element to add in there is supply chain issues. People that actually are drop shipping, which we can come on to a little bit later. That's also going to be a challenge for users on Shopify. One point from all of us in terms of what you would advise the business to do to improve it for the long run. What's something that for you comes to mind?
For me, And when you say that, you're not talking about in terms of the stock price going up significantly.
No, I'm actually
It's
just talking about the
just
business
talking about
itself.
the
We looked
business
at the
model.
fundamentals. You're sitting on the boardroom, and what would you kind of suggest?
I think for me, it's just the cost model. They need to figure out a way to acquire. No, okay, let me rephrase that. There's two major roadblocks I think that they need to focus on. One is how do they acquire customers at a lower cost? Because their sales and marketing cost is significantly high. It's gone up year over year. I think it's close to 1 billion. It's like 900 million is what they're spending on it. And then the second element and that I think I would put into consideration is the risk that is based on Apple and Google in regards to their tracking, the tracking ads tracking. So we've seen that Apple and Google are starting to play a big role in terms of privacy and allowing certain information to be shared with third-party apps. And this is driving not so much sort of clear data on the customer
Policy.
and the customer. So a lot of ads, when you're going to a company and saying, hey, I want to purchase ad from you, you want to know what's the target audience, what's the age demographic, region, all of these different data that you would want to get, which previously you could collect from Apple and Android phones through their tracking systems. Now that these companies are making a big play in terms of privacy, this is going to impact Shopify and multiple companies when it comes to the ad space. We've seen this already with Facebook. And we're going to see with multiple companies around that. So they need to figure a way around that. I don't have the solution, but those are sort of the two big areas that I'll say they should focus on.
That Daniel, thoughts from your side in terms of studying kind of what's kind of not worked out so well for them. What would you suggest to sort of help turn the business around?
For me, what's top of mind is thinking about going back to how they started being a product-led company, and thinking about what products or what can they release. So in 2014, they expanded to also being a movement next company by refocusing on their e-commerce tools to broaden the mission of helping everyone sell on as well as offline. And when they did that, they were getting more distribution channels and casting a wider net. And I think that was a huge part to the success. And I think as I wouldn't say they reach a mature market or saturated market, but with increased geopolitical factors coming into play, with inflation, with the tale of 6 Fed rate hikes this year, and other factors coming into play with pandemic proof or not proof companies, with the situation in Europe, these all have a play on companies worldwide. I don't think Shopify are an anomaly. I think there are many other companies that are facing a similar downward turn in their share price. But I think it's transitory. I think we're not here permanently. It's going to rebound. It's going to change. When you look at 2 years ago, April 2020, March 2020, it was a similar story. And look how things progressed in the 3 months after that. But I think they just need to refocus on what value can they bring to their consumers. How can they continue to retain their subscribers? The subscription model works well. How can they retain and also attract? I think the pandemic's been helpful, as it's been said already, but I think it's now retaining as people sort of adjust to a new normal. Whether those who've created online businesses are now leaving them behind, or those who have created them are now seeing it as a full revenue stream for themselves and their household. I just think they need to think about what product next, and really honing in on that mission of being a product-led company. Because when you're a product-led company, you always want to bring value to your customers.
Great take. Good. We're kind of coming to a close. Just before we wrap up, I thought it'd be good just perhaps myself and Olu to maybe share a little bit as to a bit more of our experience on Shopify. I can start. Olu, if you've got your numbers, maybe you can also share how your trading years went. But yeah, maybe just for a bit more context. So Shopify, I think, was a no-brainer in terms of if you're thinking about starting a side hustle or business back. We started ours in 2017. it was very popular to do so and using that platform. So I built what was called a store with the strategy of drop shipping, which is basically built a site, and then I would basically market products that was connected, or basically pulled it in from Alibaba. I would then run marketing ads using Facebook. People would then be directed to my site, purchase a product, and then the products will get shipped directly to that person without me actually seeing or touching the product.
Oh wow,
So
man, Pete, that sounds real good, man. Those numbers must have been high. You must have got some great sales on that, because
no,
for
I'll
me
tell
just
you,
thinking, just for me thinking about that's a great concept to that. Run the numbers, run the numbers. They must have been like, were you close to retiring?
no. But the thing is, what I will say is, you can't really talk because you didn't try, right? So
Oh
we
no,
did.
no,
Myself and Ollie did.
I'm just no,
No,
I'm not
I'm
looking to
joking.
hustle. I'm just
No,
saying,
I'm joking. Yeah,
what were the products? Were they like were they pet toys or something? Because that's quite highly lucrative.
yeah. So one of the strategies to get into it is actually to go for popular niches, right? The Americans call it niche, but we call it niche. And so they say your passion shouldn't be your passion is not your profit. Someone else's passion is your profit. So pets, for example, is a big niche. Animals is a big niche. Sport. So I started off testing and piloting selling necklaces, dog necklaces, cat necklaces. And I still remember, I've still got the video. I think it was in May, 7th of May, where I secured my first sale. I just saw the bar go up, right? And the sales strategy was actually the following. So I would market on Facebook. I was deep in the game, guys, man. I'd market on Facebook, which basically free product, just pay shipping, right? And then effectively it was $10 reduced to zero. Get someone to the website when they basically go through on a point of checkout, because they've now invested into this product. They really want this necklace. At point of checkout, the shipping would be $7.95. But what it is psychology tells you that I'm still getting it for free, so I don't mind paying the shipping. So yeah, run a few sales of those. I actually then moved up to like custom canvases, so you could basically take a shoe or a pillowcase or a blanket and put a design that you wanted on it, and then that will get basically shipped over. So I think my highest month was a couple £1,000 in couple $1,000 in sales. But all in all, net money in, money out, I lost $8,000. $8,000.
That's not too bad, actually. Can I?
And that,
You know,
and that,
you know,
and the main
that's
source behind that. Sorry, main source behind that is you need to be an expert in Facebook ads. It's very easy to. You can lose a lot of money running ads because it's the testing process, and then it's lookalike audiences, and you're continuously trying to recycle audiences, but you find yourself very quickly going from $5 a day to $50 a day. If it doesn't work, you got to stop it. So it became a real operation. But yeah, all in all, lost 8,000.
I have a question for you.
Yeah.
Would you try that again? Say, you had more time or something, given that in 2020 the demand for people buying pets went through the roof. People were buying dogs, and keeping them for a long time. And
a long time, Daniel, like for life, basically, right?
Yeah, because dogs aren't just for Christmas.
Exactly, for life.
So do you think that people would you say you knew you were at the cusp of this happening? Would you try it again and then employ someone like a Facebook ads expert or growth marketing team to help do that?
So what I learned from that experience, because I always think to myself, where would I have been today if I continued? What kind of numbers would I be doing? Right. And the goal, actually, why I started it, because I said to myself, the target is to net £30,000 a month, and then basically push that into property and then build that machine that way. What I learned is I didn't build a team fast enough. So I should have brought on VAs very quickly. It was basically me just trying to figure out myself, learn from Adrian Morrison, who's an expert in the space based in the US. He says something, I'll try it, but I had no one else plugged into the game. So I should have had a lot more people that were vested in building this business. The other thing I could have done is actually bought up and running brand that was already doing sales, and I just basically took control. I just basically controlled it and bought the business. So even though it's online and you was kind of piloting, the same questions still apply. What team do you have? What's your role? Because you can't do everything. I was doing everything, every single thing, searching for products. I was fulfilling products, customer complaints, customer service. I remember there was one time there was a guy that ordered 100. I think he figured out the hack on the shipping. Our closing on the shipping. So he ordered like 100 products, but it basically messed with my profit. So I said to him, sorry, we can't fulfill. And he said to me, no, we will fulfill. I want these products. I said,
So-
nah, sorry, we can't fulfill.
So is it that he bought 100 products and paid one time for shipping?
Exactly, something along those lines. So it was almost like I would have had to have paid more just to deliver it to him. So then, they were one of those kind of situations where I was like, nah, sorry, we're out of stock.
Put you out of business.
Yeah. I said, we're not doing this. But I liked seeing orders come in and things of that nature. I'll pass it on to Olu, and then I have one last point around why I brought this onto the topic, because to your point, Daniel, 2 learnings. 1, build a team, get that up and running, start outsourcing certain roles, and I would have probably grown better. The second thing is about the position of a shareholder and operator. But I'll let Olu go first. Any thoughts from Olu?
It's
And then
funny
I'll
you said
share.
that, because P, whilst you're talking about the 8K you spent, I did a calculation to see how much if you had just
No,
invested 8K.
Olu, that's net 8K loss. So he would have spent
Loss.
more.
Yeah. So lost 8K.
You see what I mean?
So in and
so
out,
would have
money
been more.
made, money.
Yeah. So
invested.
it's better for me to
Okay.
use the net, because you wouldn't have lost. So yes. So you probably spent more than that, but I just did the 8K of what he lost. And I looked at, based on what he had lost, if you had put that into the market, what that would have been worth today, and you would have sort of 4 times your money in that space of time since you started that business.
Well, to your point, actually, what numbers I had here is I said to myself, if I had started that, I should have basically, the same reason why I started it, I should have also said to myself, let me invest in this, because if I'm starting it to build an online business, other people are doing it as well. So this is something that if I believe in it, I think it's going to grow. If I put 5K in, so instead of invested into the education or trying to build a business, I put 5K in and I sold at all-time high, I would have walked away
You
with
even
100.
went all-time highs. I was
went
basically, I was looking at even the value today. You're already 3 times
So I
your
went
money.
all-time
So
high.
if you went all-time high, what was it?
Just with 5K invested back in 2017, I'd walked with £170,000 today. They don't pay a dividend, right? But think about that, literally nothing. And I know a couple of Shopify employees that made bank working for the company because they had vested stock and they walked away. They're up. Let's just put it that way. They're in Portugal right now as we speak, sipping, enjoying life. So I just find it interesting how always take a piece of equity, even if you're in the business, even if you're
I
playing.
think we learned that with this company. We learned that with Apple. If it's a company that you're using on a day-to-day basis, especially in the early days, what's the reason not to purchase equity? If you already believe in it and you feel like they're solving a solution for yourself, it doesn't make any sense not purchasing it. I'm not going to spend so much time on my story, just because I started drop shipping after talking to, I think P started it first, and then I spoke to P in terms of, this is something I'm going to do. So spent a few days on YouTube, sort of learning how to create a website myself. Few more days on YouTube learning how to do Facebook marketing. And in regards to my niche, I decided to go also with pets, but like pet grooming items, because it's a very niche area where people will spend a lot of money, especially late at night. So what you're trying to do is basically get impulse purchases late at night, which then will earn you some money. Now, in regards to, thankfully, I didn't spend as much as P in regards to Facebook ads. So, but maybe that would also tell you why my sales were what my sales were. But I basically spent £100 on Facebook marketing, and my sales were an outstanding 1.
Right, listen, people don't understand.
And to make that 1 even worse, it was me
You
testing.
bought it yourself.
It was me testing the end-to-end process of purchasing, receiving the money.
I've done that.
Wait. No, but to put it into context, how long was it live for?
It was a few months. It was up for a few months. But what the issue was, I wasn't willing to put the money behind
invest
the Facebook marketing. because this was a game where it was the more you
spend
put
a
on the
grand in 10
Facebook
minutes.
marketing and the understanding your customers and customer acquisition, you're able to sort of test your products and stuff. But I wasn't willing to put that much money into
The
it.
issue, not to go deep into it, the biggest issue with Facebook is more money doesn't mean straight more sales. You've got to warm up the pixels and warm up basically being able to look for the audiences that you need. So before you start learning how it works, you're already thousands of pounds in. It's like a gambling table. It's like, yo, I need to keep going.
But my biggest frustration, I would say, with it all is that I wish we had learned about this during university days. I think if P and I were at John Crank, which is the library on at our university, and we had spent days just locked in there, we would have figured out a way to make it work. We would have had the time to make it work as well. Our part-time jobs and student loans would probably have funded our marketing budget, and it probably would have worked. And I do believe in drop shipping. I've seen a lot of success stories there. But also, I think the easiest way is just to become an investor from day one, buy equity.
Yeah.
Yeah, just a couple of quick observations just based on listening to that story with you guys. I think one thing is probably a challenge that the Shopify business has is that Facebook ads just aren't landing as well as they used to. And probably we've seen that also have a negative impact on the Facebook share price. And this is obviously having a knock-on effect on a platform like Shopify. So that was one observation. The other observation actually is listening to you guys, it reminded me of this interview with Rick Ross where everyone whenever they think of Rick Ross, they think of multiple brands, but Wingstop is something which is quite synonymous with his brand. I remember he was being interviewed once, and he obviously has multiple Wingstop franchises, so probably he's invested for cash flow. But then in this interview, they asked him, "Do you have any equity in Wingstop?" And he kind of paused a bit, and then he kind of gave an answer, but the answer indirectly indicated that he didn't have equity, and clearly he's got something out of that business by being a franchise owner. But what's interesting is the Wingstop share price has, in the last 5 years, 4x'd. So then I think that, again, is another example. Is even if you are an operator in a business and you are generating good returns, if it's a business that's working for you from an operational standpoint, then it is really something to consider as an investor. And I think listening to both of you guys talk about the experience with Shopify, I think it just reminded me of that story.
I love that because sure, that's just really a shift in mindset, right? Moving away from being an employer to an owner, right? And even if you're not able to get equity at a pre-IPO point, as soon as they get into the public markets, you're able to just purchase stocks from a broker. And I think the numbers you mentioned were public whilst the company had become public, right? So you still would have 4 times your money in that situation. And I know everyone on this call, if you could go back to the beginning of Apple, the beginning of Shopify, the beginning of Wingstop, you would invest in those companies, especially if you're living it in there on your day-to-day basis. You're making money through it. You see the opportunity. You see other people being able to leverage the solution that the business brings. Why not be an owner versus just an employee?
So thank you all for listening to episode 123 of Take Flight Podcast, where we've dug into Shopify a little bit deeper, and you've heard some great personal stories from Olu and Pabilo, who unfortunately didn't become multi-millionaires from Shopify, but nevertheless, they've learned from their experiences and certainly applied it into their endeavors currently. As always, if you have any feedback for us, you can find us on Instagram at Take Flight Podcast. Alternatively, you can email us at takeflightpodcast@gmail.com. But until next week, for our Take Flight takeaway, stay safe and God bless.
Take off, take